Gaurang's with us. He's head investment strategist at Geojit. We're also joined by Samit Chavan, technical analyst at Angel Broking. Samit, thanks very much for joining us. First of all, your thoughts on the overall structure of the Nifty and the Bank Nifty, and where do we go from here?
Good morning. We have been seeing very strong momentum in last 4-5 days. Nifty gave a sharp recovery from the levels of 85.40, 85.50 in merely 6 to 7 trading sessions. We are now inching closer to 9,000 mark. It's a matter of time that we are likely to cross this strong hurdle of 9,000, 9,100. But before that, we expect some consolidation happening. That consolidation could be in a range of say 150, 200 points. So immediately we see 8980, 9000 as a resistance. Those who have bought it at lower levels, they should lighten up their positions a bit. And stock specific action are likely to continue. We expect Nifty to now oscillate within a range of 9,000 to 8,800 at least for next 1 or 2 weeks.
Samit, you mentioned lighten your positions, but why should you lighten your positions? Why don't you go with the trend? And if the index stops, let's say 200 points above, you can always close your position. Why lighten at the moment?
See, I mean, as I said, going forward, at least for next 1 or 2 weeks, we expect some consolidation, and that consolidation could be in a range of 150, 200 points. In Nifty, it might be very small range, but stock specifically, we expect some profit booking to happen. So that's the reason we are advising our traders to lighten up their position. They can either trail their stop losses higher, or else they should at least book their partial profits.
Gaurang, thanks for joining us on Market Movers. I wanted to take your view about the shifting priorities of those who are in the market. I mean, there is always a valuation block, but some would say this kind of momentum makes this a flipping market. You can easily flip the stock, and if you're a seller, there's no reason to be forced to go and sell because you're getting better prices day after day. Just your thoughts on the overall market that way, Gaurang?
Good morning. If you are looking at your investments from a long-term point of view, one definitely has to go with the trend, and they say that the trend is your friend. And keeping in mind the kind of levels that we are likely to see possibly in the next 2 or 3 months, especially by December 2016, in case if the budget has to be unveiled, along with the railway budget in Jan 2017, then I think you are definitely going to see a robust and a very strong uptrend in the market in terms of pre-budget run. So it's not going to be difficult to cross over to the earlier highs of 9100 or thereabouts and go towards 92 and 9300. But the point is that one has to also take into consideration how much of the market has gone up, and of course what is the risk appetite going forward from here on. Now, purely from a short to medium term, well, it's definitely mouth-watering to take money off the table, given the kind of moves that you have seen in some sectors and within those sectors in some of these stocks. I would definitely go with the view that consolidation and some amount of profit booking should be there in the market. And it's not far too long back, Ashu. Just 10 days back, we were all discussing about when do we cross over that 87.50 mark. And today we are at 87.30, 40 on the Nifty spot. So, and at this level, Ashu, has come in after a long period of consolidation. And it is always healthy to have a very strong foundation to sustain that next up move that we are witnessing right now. So, my sense is that you are not going to see any huge breakdown or breakout. We will possibly, nor do I see levels of 86 or 8700 on the Nifty spot. So, I think maybe 89, 88, 50 could be the lower level. And on the higher side, I think we move towards 89, 70, 89,000 level. You are going to see some amount of, sell-off and profit booking coming as well. But, after all these, the thing that you have to remember, Ashu, that we have been one of the best performing markets in terms of equity in the last couple of months. And we have been one of the best performing currencies in the recent time against the dollar. So my sense is that, yes, there is more to be made in terms of your investment, but one has to also keep in mind that there is no one-way direction in the market.
So, Gaurang, I wanted to look at this market from the perspective of, let's say, a fund manager. So, I'm a fund manager here. I'm getting record flows. When I espouse my thoughts on television or in magazines, I say long-term value everything. But I know at the back of my mind that unless in the next quarter I appear to be amongst the top 5 or the top 10 performing funds, nobody is going to give me money. Because 90% of the people basically invest by picking the top 5 or top 10 funds. Nobody looks at fund managers, nobody does any of long-term record, nothing. So by definition, I'm a trader. Because if I want to sustain my position, I don't have a choice but to be in the fastest running stocks. If that's the scenario, Gaurang, I'm just wondering if an individual investor needs to sell and those who have not bought can buy, because the institutional investor himself is in a big dilemma. He's getting money and he has to behave like a trader.
Well, that's definitely there, and that's basically the liquidity that is chasing the stocks in the market as of today, especially in our market, Sashu. And whenever you have liquidity chasing stocks, there is no point at times sitting and thinking over whether the valuations are expensive or whether the valuation is cheap. Now, with the kind of appreciation that we've seen, and of course with opportunities becoming lesser and lesser by the day as we go towards the all-time high that we've seen, there are still sectors and stocks which are looking attractive to us, at least from an investment point of view. And I would definitely go on record to put that we are extremely positive on the IT. We discussed this over a period of time, Ashu. And we remain our positive view. We continue with our positive view on the IT sector. Selective pharma stocks, there is plenty of opportunity. There are stocks in the auto ancillary side, which we feel that could give you a tremendous amount of investment opportunity and return over a longer period of time. Metals, I would say that some of them are looking weak, while on the flip side, some of them are looking equally healthy. So, one has to identify, and of course the broader markets are not to forget that, especially the mid-cap universe. And I would go to that extent to even say that some of these mid-cap names have even got, possibility and strength and earnings visibility to become large cap of tomorrow or day after. So, it's only a matter of time. Yes, they will have redemptions also coming in at the same time, and you will have fund flows also coming in at the same time. And you need to balance your act of investment and then possibly take a call.
Right. So I'll just come back to the issue of IT in a moment. Samit, PVR, Apollo Tyres, Kajaria Ceramics, and we can also take maybe Central Bank, if they've been on your charts.
Yeah, as far as Apollo Tyres is concerned, we have seen a great rally in the overall tyres, be it CIAT, be it MRF, be it Apollo Tyres. From current level also, this stock has a potential to move beyond 200, 210 levels. So any dip would be a buying opportunity. If we look at the overall monthly chart structure, the stock has bottomed out around 150, 160, and since then we have seen a spectacular rally in this stock. So we believe that the stock has a potential to move towards at least 225, 230, which would be our 2 months target. So any dip would be a very good buying opportunity, and we see base shifting higher now. 180, 185 has become a very strong support level. As far as Kajaria Ceramics is concerned, this stock has been a very strong mover since last 5 to 6 months. 6 months back, the stock was somewhere around 600, and now it is trading around 1300. So clearly it is moving in an uncharted territory. The momentum is quite strong. Those who have bought it at lower level, they should ride this trend. There's a famous saying, trend is your friend. So in such kind of stock, you should trail your stop losses higher now. So 1150, 1200 has become a very strong base, and this stock can continue its support bias at least towards 1380, 1400 in the near term.
Right. And Gaurang, I just wanted to come back to IT and pharma. I know you have mentioned this before. And one of the things that you have to say to yourself, that if the overall index has risen by 14, 15, 20%, and stocks like, Tata Motors have risen 15%, Yes Bank 12%, SBI 12%, ICI 10%, then it's an anomaly if IT, some pharmaceutical stocks like Cipla have moved, but especially IT has not really done anything, that its valuations will have to readjust to at least the market, if not to itself.
Ashwin, tell me one thing. Aren't all these companies that you just mentioned running somewhere on back of the IT platform? Aren't they using technology? And as of today, it is, you become absolute in terms of not using information technology for the growth of your business. And I will also say that, yes, it's not going to be 1 month, 1 quarter, 2 quarter, 3 quarter investment on the IT. It's going to take a while. Innovative ideas and innovations are definitely going to drive the future growth for the IT sector, be it in terms of digital, be it in terms of artificial intelligence, be it in terms of pocket computing or cloud, as a matter of fact. And, we have uncertainties in terms of Brexit and its impact and the US presidential election. But at the same time and in the same breath, most of the management who came out of the numbers and were disappointing or not very encouraging have gone on record to say that they find tremendous opportunity in India itself with the kind of policies that the government has, initiated. And I will also say that, given the, concern in terms of salary hikes and inability to rope in big-ticket clients, I think that's a short to medium-term kind of an hangover on the IT sector overall. But yes, managements are putting their strategies in place. They are doing what needs to be done to make their businesses more stronger and innovative. And our sense is that over a longer period of time, in the next year, year and a half, we will definitely have performance come in and contribution come in from the IT sector. And at the same time, if all your sectors have gone up to a great extent, like you were just listing down some of the stocks and sectors, somewhere people will find opportunity in IT. And that's where we are saying that, investment funds will definitely be attracted in the IT pack, and there will definitely become flavors of tomorrow's and the day afters. And not to forget, all these companies have got a proven track record of creating wealth for investors from a long-term point of view.
Mm-hmm. Sumit, I want to take a couple of auto ancillary stocks. Can we bring up Automotive Axles, UCAL Fuel Systems, Subros, Rane Brake Linings? I can't call them a clear trend, but as you can see, it looks like they've broken a channel, and it's a 90-degree ascent. So sometimes it's difficult to know if the 90-degree ascent has what we call a time confirmation, but it's there in all of them. So Rane Brake Linings, and also so any thoughts, Sumit, Automotive Axles, Subros, UCAL Fuel Systems, and Rane Brake Linings?
Yeah, after a long consolidation, we saw a breakout in Automotive Axles during yesterday's session with substantial rise in volumes. Today also, we have seen a follow-up buying. The stock is nearly 7.5% up. So the overall trend has been positive since last couple of days. And if you look at the weekly chart structure, the stock has broken out from its nearly 2 to 3 months range. 650, 660 was acting as a very strong resistance, and now it has broken out with substantial rise in volume. So we expect this momentum to continue. This stock has a potential to move beyond 800, 820, and when such mid-cap starts moving with volumes, you can see very strong moves in the near term. So 800, 820 would be the near-term level for automotive. As far as Rane Brakes is concerned, this stock has been a clear outperformer since last few months. It is trading around its all-time highs, clearly in an uncharted territory, and it's been gravity-defying move. So we believe that the momentum would continue, but fresh buying would be very difficult at current levels. Today it has opened with an upside gap, so that the gap would now act as a strong support in the near term. So 950, 930 has become a very strong support, and this momentum can extend towards 1080, 1100 level.
Right. And another group of stocks where you've seen some very strong momentum, but again, I'm talking about not looking at the past and just really looking at the last few months, is Patel Engineering, CNC Construction, Sunil High-Tech Engineers, PB Infrastructure, essentially anything to do with infrastructure. But we have to know why this rally is happening. This rally is not necessarily happening because of buying, but it's happening because these shares are almost 100% pledged in some cases. And the gentleman or the company that's sitting with the pledge essentially saying, well, if people are pushing the prices up by 50, 60, 80%, well, why get out? Why can't we hold on to these stocks and we'll get out later? So please be careful, because there is no clear chart pattern, and these companies are in severe trouble. And I'll ask Gaurang this, but you know, infrastructure is one of those groups of stocks where the economy has changed, but you as a shareholder have got no benefit out of the growth of infrastructure as a shareholder. I'm not saying as a consumer. So Gaurang, I wanted to take two cases, GVK and GMR. Yeah, both the Delhi and Bombay airports look good. Maybe the Hyderabad airport also looks good. I've not been there. But if I was a shareholder, I've been completely shafted. I've got nothing out of it. I'm just using them as an example. I could have been in a road construction company. I could have been in a tunnel company. So here's a classic example where the growth in the country's infrastructure gave me nothing as a shareholder.
Sure, and I've been to that Hyderabad airport, and that is also a state of the art. Other than Delhi and Mumbai airports, where of course Flyers does experience a very comfort soothing factor. And I think the investors of these stocks have only to be happy whenever they go to these respective airports in terms of arrival or departure. So my sense is that with the debt and of course with the kind of execution issues that all the GVKs and the GMRs and the Lancos of the world is having, it's quite obvious, and they have been laggards over the not only last 1 year but over the last many years. And I don't see those fortunes turning around. And these are more of trading bets, Ashu. And each and every second investor would possibly be having one or the other stock out of these 2 or 3 names that we've spoken about in the portfolio, and possibly at a very elevated level, and wondering now what to do now that they are stuck with this investment. Well, initiatives by the government have been put in place, but I don't know how soon these kind of companies would benefit in terms of debt coming down, execution improving, and thereby their order book also increasing. What we have also been given to understand is that there are about 30 defunct airports which the Civil Aviation Ministry is planning to reopen and make it functional to improve the connectivity of the aviation sector as of say. But, I don't think that they are, and in terms of investment, yes, you would possibly be better off investing in companies like Ashoka Buildcon or Dilip Buildcon, the recent listing, KNR Constructions. If you're talking about pure construction plays and names like NBCC, who have been steady performer, earnings visibility is there, and of course there is growth going forward from here on. The problem with these 3 names that we spoke about, Ashu, at every pullback you will see people want to exit the stock, and that limits the upside, which is also of course short-lived.
So Gaurang, lately I don't know what happens because I don't have any shares, but earlier I remember, at least in the 80s, a lot of the companies would attach discount coupons for their products. So maybe an airline company would attach a discount on the plane, and a garment company would attach a discount on the stores. Does that happen anymore? Maybe GMR and GV can make it up by attaching some discount coupons.
Yeah, but on that, I don't think you can get away from the development fee that you have to pay.
All right, Gaurav. Hold that thought. I have just time for one more question. I'll just bounce it off Samit. Samit, CEAT, if you've had a look at it, since we talked about that Apollo, if you can just take a look at CEAT also, MRF and JK Tyres.
Yeah, with a near-term view, we had recommended the stock 2 days back around 920s when it gave a breakout from its resistance of 915 with substantial rise in volumes. We have an immediate target of 1010. In 2 days, the stock reached our target and is now moving beyond it. The overall trend remains strongly bullish. We see now 900, 920 has become a very strong support. Though we have booked our profits with a near-term view, this was really a momentum trade. But with a medium-term view, this stock certainly looks good. So any dip towards now 950, 960 would be a very good buying opportunity. And this stock has a potential 1100, 1120 could be the next possible levels.
If you're wondering why yesterday's rally in Axis and Yes Bank and IndusInd Bank did not continue, well, the simple reason is that sometimes there is an institutional order, which is like I pick up the phone and I say, buy 1 million shares of Yes Bank. Now, when you buy 1 million shares of Yes Bank, you will see an 8 or 6% rise coming in stocks like this, but it will not be sustained the next day. So the chart may be fine, but please watch whether, that's why I keep saying you can't look at just price, you have to look at volume and time confirmation. Just your quick thoughts on Axis, Yes, and IndusInd. Samit, looks like there was one big institutional order because after that they've kind of quietened out.
Yeah, as far as Axis Bank is concerned, this has been a very steady performer in the private banking space in last 3 to 4 months. Now it is inching closer towards its all-time high. It's a matter of time. This stock is likely to surpass this hurdle of 644, and the stock certainly has a potential to move beyond 670, 675. Yes, the stock has already rallied quite a lot, so we might see some consolidation happening. But if you have a 1.5 month view, this stock has a potential to surpass the 660, 665 mark.
All right, on that note, the market is quiet today, so market movers is kind of market neutral today in terms of the market itself. Gaurang, always a pleasure to speak to you. Thanks very much for joining us. Samit, thanks for walking us through the technicals. The Mindtree Management will be speaking to you. The Chief Financial Officer will be joining on Corporate Eye. From Deba, our producer, Smita, and her team that put together all those beautiful graphics you see on the screen, and everyone here, thank you for making us a part of your lives. Goodbye.